Do you find yourself in a temporary financial bind, and are you thinking about Lendable as a potential help? There is a good chance that you have come across comparisons suggesting that Lendable is an alternative to payday loans. Is this, however, the situation in reality? In order to be a financially savvy borrower, it is essential to have a solid awareness of the fundamental differences. In this article, we will delve into the world of Lendable and dispel the fallacies that surround its link with payday loans. A payday loan is a high-interest, short-term advance that is often due based on the borrower's next payday. Individuals who have limited access to traditional financial sources are frequently the target of their efforts. They are appealing due to their speed and the ease with which they may be accessed. Yet, the downsides are significant. Here are some of the reasons why payday loans are problematic. The interest rates on payday loans are extremely high, frequently reaching 400% APR, annual percentage rate. Payday loans are characterized by their exorbitant interest rates. Furthermore, this results in large additional fees being added on top of the amount that was borrowed. Potential to become a debt trap. The short payback term, in conjunction with the hefty fees, has the potential to quickly trap borrowers in a cycle of debt. As a result of the snowball effect, it is possible that they will need to take out another loan in order to repay the first one. Influence on credit score. If you fail to make payments on your payday loan or make payments late, this can have a negative influence on your credit score, making it even more difficult for you to obtain financially responsible credit in the future. Lendable operates in a distinct space compared to payday lenders. Here's what sets them apart. Larger loan amounts. Lendable offers personal loans ranging from £1,000 to £25,000, significantly higher than the typical payday loan amount of a few £100s. Competitive interest rates. While interest rates are variable and depend on your creditworthiness, Lendable generally offers much lower rates compared to payday lenders. Flexible repayment terms. Lendable provides borrowers with extended repayment periods, typically ranging from 1 to 5 years, allowing for more manageable monthly payments. Focus on responsible lending. Lendable is authorized and regulated by the Financial Conduct Authority, FCA, in the UK. This means they are subject to stricter regulations designed to protect borrowers from predatory lending practices. In essence, Lendable caters to a different need. They provide a more traditional personal loan option with larger loan amounts, lower interest rates, and longer repayment terms. Deciding between Lendable and other options, a framework for informed borrowing. Now that you understand the core differences, let's explore how to make an informed decision. Assess your needs. Do you require a small, short-term loan to bridge a temporary gap, or do you need a larger amount for a specific purpose like consolidating debt or making a significant purchase? Compare rates and fees. Research interest rates and associated fees offered by Lendable compared to other lenders, including banks, credit unions, and alternative online lenders. Consider your creditworthiness. Your credit score will significantly influence the interest rate you qualify for on any loan. If you have a poor credit score, Lendable might still be an option compared to payday lenders, but you might still receive a less favorable rate. Explore all options, exhaust all possibilities before resorting to any loan. Consider dipping into savings, negotiating payment plans with creditors, or seeking help from credit counseling agencies. Responsible borrowing is key, building a sustainable financial future. Regardless of whether you choose Lendable or another lender, responsible borrowing practices are essential. Borrow only what you can afford. Only borrow what you are confident you can repay comfortably within the stipulated time frame. Create a budget. Develop a realistic budget that factors in your income, expenses, and debt obligations. Prioritize repayment. Make loan repayments a top priority in your monthly budget to avoid falling behind. Explore debt consolidation. If you have multiple high-interest debts, consider consolidating them into a single loan with a lower interest rate. Remember, borrowing should be a last resort, not a first response to financial challenges. Lendable presents a viable alternative to payday loans for borrowers seeking larger amounts, lower interest rates, and manageable repayment terms. However, responsible borrowing practices remain paramount. Utilize Lendable as a tool for financial progress, not a quick fix. By carefully assessing your needs, comparing options, and prioritizing repayment, you can navigate the lending landscape and build a stronger financial future.